Okay, for this video, I wanted to cover the earned income tax credit for Colorado tax purposes. So we're all familiar with the federal earned income tax credit, but what a lot of individuals don't know is that a lot of states have their own version of the earned income tax credit. Roughly about 30 states have their own version of it, so you can qualify for both the federal earned income tax credit and get a state earned income tax credit as well. Colorado is one such state. So I've got the Colorado return in front of us here for our taxpayer, John Taxpayer. But the first step is always to compute the federal credit first on your Form 1040. And this is because a lot of states, Colorado as well, give you a credit based on a percentage of your federal earned income tax credit. So obviously you need to compute the federal first to take a percentage of that number, and that's what you get at the state. So we've got John Taxpayer here. He single filer, no kids. His wages are $18,000 a year, and his investment income is below the thresholds. So even though he doesn't have any qualifying children, he still gets the earned income tax credit. So if we look at John's 1040 here, and we look at the earned income credit worksheet, we can see how the computed credit is calculated here. So he's got his wages up here is the amount of earned income. And then based on this amount of earned income, if we look at the earned income credit tables, the amount of credit he's eligible for is $521. Okay, so the $521 is then reported on page 2 of the Form 1040, line 27A. Okay, so there's his EITC for federal tax purposes. Now, John's a Colorado resident, so he needs to do his Colorado resident return, right? The resident return for 2021 here is displayed. This is a DR 104, right? A pretty simple return, not as much information reported as a federal, but we have, again, a full year resident of Colorado, John Taxpayer here, some information on John, his address, his phone number. And then if we scroll down here, there is a separate form to compute the credit. So we'll go down to the form first, and then we'll come back up and see how it flows through the return. So Form 104CR, right, this is the form that's used to compute the individual tax credits. So in Part 1 here, we pull the information first from the federal return, right? Remember, the Colorado earned income tax credit for 2021 and prior years, it's 10% of the EITC, but it's actually going up to 15% in 2022. So if you're watching this in 2023, while preparing your 2022 tax return, you've got a larger amount of credit. So we've got the $18,000, that's his earned income. $521 is the federal EITC that he's claiming. And then if we go down to page 2 of the 104CR, you can see on line 4 here, it asks us multiply line 3 by 10%, and that's $52. Okay, so that $52 is John's earned income tax credit for Colorado tax purposes. So he's got $52 as a credit here for state tax, and then he's getting the $521 at the federal level. Now, the $52 credit ultimately flows back up here to his return. So if we go to page 3, you could see here, line 25, the amount of refundable credits from the DR 104CR. Okay, so pretty straightforward. It's just something that a lot of taxpayers, if you live in a state that has this available, absolutely make sure you're taking advantage of it because it's extra money in your pocket, right? Try to lower your tax liability as much as possible. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, leave me a comment below. I'm always happy to answer as many as I can, and I look forward to seeing you again on the next video. Thank you.